Good evening, everyone. Hello, hello. How's everyone doing today? Are you guys all right? George, nice to see you here, my friend. How is trading going? Guys, you can use the chat to type anything you need. So, we are ready to start. I see a lot of people joined us today. I'm sure we're going to have a lot of fun in this webinar because I want to make sure that you are going to be also engaged, and I'm not going to just sitting here and blah blah blah, although I'm the only one that speaks in this webinar. But yeah, I'm going to ask you a lot of questions, so you're going to have the enthusiasm to be a part of it. Okay, so let's start. Hello, Daniel, how are you? The disclaimer first, just to make sure that everyone understands that this webinar is not a direct or indirect financial advice or personal recommendation to any person. And yeah, pretty much that's all from here. For those they see me for first time, who is here for first time? Can you let me know? Who joined this webinar for first time? Make sure you can use the chat to communicate. Yep. First time, second time. Okay, if you say for third time, I'm gonna laugh a lot. No, because that's the second time we do the webinar. Mogil, what a surprise, my friend. It's been a while. How are you? Alejandro, from the way you wrote that your name, I'm sure you are Latino, Spanish, something like that. Yeah. First time. Nice, nice. You are all extremely welcome. Uh, Será solo en inglés, bro. I can read it, but I don't know what it means. So, for those they are first here. My name is Theo Theodoro. I'm originally from I'm Greek Cypriot, and I mean all over the social media. You can check my profiles. Also, I'm going to share my Linktree page where you can see the most important profiles in case that you want to reach out to me for any questions. Now, why you need to pay attention to what I'm saying, what I'm going to say to this webinar. I'm not a guy from the YouTube. With respect to all these guys, they are YouTubers, but I use trading as a source of income. I use trading to make money. I don't use trading as a vehicle to create videos and become a YouTuber. Okay, and I have proofs here, not only in my accounts, but also academically. I proceed far and beyond the fence a career in trading. I also obtain certificate by worldwide recognized organizations like the Society of Technical Analysis in the UK. I also have certificate from the International Federation of Technical Analysis. That's another worldwide organization in the US. In trading, it's my 12 years now, actually, not 11 years. I specialized in CFD trading and also in futures. It means currencies, indices, commodities, cryptocurrencies, and all these things. All right. On a daily basis, beside the trading activity, and I see a lot of my students here. As you know, I trade anywhere between 10 a.m. mainly to 11:30 max. But the rest of the day, I use it either for a couple of hours per day for private mentoring, coaching. I teach trading. I have my course, and I teach to everyone who wants to exceed far and beyond their results in trading. I also deliver to some reputable hedge funds daily analysis. I also write there and then articles in financial magazines, not very often, but I do that. And many in the industry, they know me as that young guy who interviewed John Bollinger and Steve Nilsson and other famous traders, worthwhile class traders and authors. John Bollinger, if you don't know, he created the Bollinger Band indicator. Steve Nilsson wrote the books about candlesticks, Beyond Candlesticks, and what's the other one? Beyond Candlesticks. And anyway, I always look on my shelf because I have all the books there. That's why whenever I mention his name, I just look on the right. So, uh, Eva, hi Theo, looking forward to some tips. Okay, okay. I'm sure you're gonna get very, very impressed by what you're gonna hear in this webinar. Yes, he's really famous in trading world. I have the videos on YouTube, and yeah. So uh, to move further, here are some of the testimonials from my students. I just want you to see that there are people out there. They take courses, they sit on one-on-one with me or in a group trading sessions, and I teach them how to trade, the way the market works, and all this stuff. And yep, I just put it out so you can feel that you can also become a successful trader, a skillful trader, investor, whatever you want. Okay, and I'm here to support you. So today's agenda. Let's see what's on today. We will learn how to master risk per trade, or even better, I will show you how and why some things work, some others don't work under prop firm trading rules. This is important. Under prop firm trading rules, guys, we don't trade with brokers, we trade with prop firm accounts. Okay, there is a different mindset to apply, there is a different reverse and direct psychology comes while trading these accounts, because we have these kind of limits that I'm going to go through in a while. I will show you how, let's annotate as well, I will show you how to secure funding without reckless risks. This is important. And if you think that this is separate from that, and then this is separate from the third, I'm sorry, they are not. They all connect together. The one will lead you to the other. So we need to learn and we need to understand. Most of you already know this, but maybe you need to understand better how to trade on prop firm accounts. Guys, just excuse me to check if there are any questions that I didn't answer. 1 second. Okay, all the questions have been answered so far. And at the end, I will show you how I trade London Open. Again, I do it live with my students as a part of my trading mentorship program. It's actual live trading, not with everyone, but one-on-one. And I place trades, you place trades, we go together, we win together, we lose together. It's a part of the game. I explain you exactly what I do, where I focus on. It's different to know theory. It's different to put everything in practice in real time, especially day trading, okay? Because I do day trading, I don't do swing trading. Is that cool? Are you still awake? I hope nobody's fall asleep on the desk. Huh? Are you still here? I hope so, because I will ask you questions now. Okay. And at the end, I will also share with you something is coming by the prop firm. And beside the raffle, we're going to have an amazing discount, but I will reveal that at the end of the webinar. So make sure you stay here. Unless you get bored by my voice and tell me, Theo, can you allow us to talk? And all right. Now, guys, I assume many of you, if not all of you, already traded with challenges from PropXP firm. Now, as you know, there are profit targets we have to meet. There are overall losses we are allowed to take, and there is the maximum daily loss. Most traders, they suffer between these two. Okay, now I put here 3 numbers. What do you think risking one? By the way, who risks 1% every time they place a trade? Can you let me know, please? If you are risking 1%, let me know if you are risking 0.5%. If you are risking 1.5%, let me know. Take 30 seconds, throw the answer on, throw your risk on the chart, and I will continue. 1%, 1%, 1%, okay, 0.5%, 3%, nice, wow, 0.25%, 0.25%, okay, wow. We'll get 1 to 2, all right, I like that, reward to risk, yes, perfect. Okay, incredible, 0.25%, nice. So, I didn't put any 0.25 or anything beyond that 1.5%, but let's break it down, because if you understand the numbers game behind the prop firm challenges, you are likely to go from phase 1 to phase 2 to fund it. But you need to also learn how to secure your funded without getting copped out. And then the third stage is what you're going to get more, the 3 AS, as I call it, the 3 simulated accounts, like I will show you. Why people risk 1%? Or why do you risk 1%? Because you think that it's okay to risk this amount of money in the market, and you can get out with that moving from phase 1 to phase 2, which it's fine. Okay, so you don't do it based on a strategy, let's say. You do it based on what feels okay to you and makes you feel comfortable risking in the market. And now I'm going to shake out some beliefs that you have about what you read going on YouTube about risking and all this stuff, and why people, they repeat the same trading errors over and over and over again, because they keep reading the same things that they are repeated from one YouTube channel to another YouTube channel, from one course to another course, from some gurus out there to another gurus out there. All right. Now, again, I respect everybody that has opinion about trading, but we are here to put you in a state that it will allows you to finally go through your challenges effortlessly. So back to the risk parameter. Why do you risk 0.5%? Because it feels safe, it feels secure. You feel that if I risk 0.5% until I reach my 10% overall, I need 20 trades. And you hope that, okay, in 20 trades, I'm gonna likely go to the phase 2. Or if you do day trading like I do, and you can place, let's say, 2-3 trades a day, if you risk 0.5%, it means the maximum daily loss you're gonna get is gonna be 1.5%. If you risk less than 0.5%, 0.25%, even longer time in the game, which is totally fine. But again, why do you do that? Because it feels good. It makes you feel calm. Why do you risk 3%? Because you want to go fast, like Mogil said, 3%. Or why traders, they can risk 1.5%? Because they want to move fast into the phase 2. But if you don't do it the correct way, I have news for you. 3 trades, actually 2.5 trades, and you are out of the game. Put commissions in, and if you do something, depends on the lot, let's say put commissions in, you are out of the game. Okay, so what's left? Which answer is proper? What's the proper one? What do you think? From experience, interacting with traders and 12 years in the market as a professional day trader, I wrote tons of books out there about technical analysis, about mindset, about relationship with money, about everything. You just name it. The only reason you do this type of risks, it's because of feelings, not because of market perspective, just purely from feelings. Okay, Alejandro said 0.5% to get from 1 to 2%. That's another trading error usually traders go through. Guys, in this webinar, I'm going to tell you what you need to rewire, how you need to rewire your mindset, your understanding in order to start seeing consistent success, to become consistently successful in trading. I'm not going to be here to tell you what you want to hear, because it's like I just embrace your current situation, and we are here because we want to change that, right? Do you agree with me? Do I have your permission to tell you exactly what it needs to be done in order to move from point A to point B without going through emotional turbulence? Okay, as I call it always. By the way, because I move my hands a lot, and my camera is an AI camera, maybe at one point you're going to see some zoom in, zoom out. Don't pay attention to that, okay? Awesome. Thank you, guys. So let me send you this one here. Okay. In case you haven't got your account yet, you just make sure you get your account as well. So based on what it feels and based on how it makes us think better, it doesn't take us out from this loop. We need to get out from the loop. If you trade with a broker, things are different. Your current risk and your current beliefs, they can apply up to an extent. But here we have to understand the game, and the game is more numerical. So what's the secret behind this? What's the secret behind the reward to risk? What's the secret behind the risk per trade? Yeah, I just say that. It's the reward to risk ratio. Now maybe you have some aha moment. Theo, we know that. I know that. Yeah, I know. I always need to go to aim for more than what I risk. But what is the ideal reward to risk in a balanced way? Not to take you to an extreme situation, but also to satisfy you. The ideal one with prop firm trading is risking, let's say 1% to make 2%. So reward to risk 1 to 2, or risking 0.5% to make 1%. Now, this will protect you from messing up with your mindset. And this is the most important. Guys, the only battle you have when you trade is how you're going to deal with your take profit when the price is above your entry point if you are buying, or when the price is below your entry point if you are selling. You sold the market here at point A, and you have a take profit at point B, and you have a stop loss. I hope you have a stop loss. I hope, because many traders, they don't nowadays. You have a stop loss at this point K. The price, the candlesticks move in your favor, and they are somewhere here. Many traders, they will close the trade because they scared if the price turns in the opposite direction, going towards their entry point, and they will not make money. So they are trading a prop account because they scared. They scared of losing money. And it's okay. It's a trading error. There is a way to fix it, okay? But we need to first acknowledge that this is a trading error. The second important thing is if you don't let your trades play out in a way that will allow you to take profits at specific reward to risk ratio, you will never, ever be able to meet consistency. Why? Because you will never create the trading sample sizes. You can measure your performance. You will not know your number. You won't know how many times I get it right versus how many times I get it wrong. So how can I trust my trading self? I can't. This is where the real problem is. The trust within your trading self, not within yourself, your trading self. You have a trading personality. And everything follows a chain. It's a chain, it's a link. Okay. For this reason, we decided to go one step further and help you to put everything back in a nice way and smooth way. Where is the problem in prop firm trading in challenges? The problem is at the first 6 trades. This is a crucial part. Let's go back to the reward to risk. Let's go back to the risk. Assuming you are risking 1%. And out of the 6 trades, 4 trades, let's say, they were losing trades, and 2 trades, they were winners. You risk 1%. You aim for 1% reward or 1.5% reward, because at some point you cannot see the price creating those swings and coming against you, and you want to just bail out of the position and take some profits. Either you go back to 0, so you are net in your account, or you are a little bit minus. In order to take 6 trades, if you trade on the 15-minute chart and you wait for some kind of 15-minute market structure, and maybe you want to wait for a specific chart pattern, and you place, let's say, 2 trades, 1 trade every two days, it will take you 15 days. After 15 days, you are back to 0. You are trading for 15 days, you have your ups and downs, and your account is back to 0. This has a reverse psychology, which leads you to the first trading error. The thought of, hey, how I'm going to go to 10%? Okay, I will increase my risk. I don't care. I'm going to go for 2% now risk. And I will try to take this reversal here. I will buy, and if the price moves in my favor, bam, I'm going to do it. Okay, I had enough. It's been 15 days. We're going to go on the next slide, and I will show you the solution on that. Or even worse, for some traders, they risk 0.5% or 0.25%. Guys, I'm not judging anybody here. I'm just telling you the reality based on the numbers. Okay, you are risking 5% or 25 or 0.25%. Nothing wrong with that. Absolutely great. Well done. But the numbers, they might not be in your favor. It might gonna take you 3 months to pass the first challenge. But in that 2-3 months, you're gonna become a bit erratic. You're gonna become a bit I had enough. I just want to move forward. How I'm going to do it? And then you start playing with your risk. Whereas the solution is not at the risk. It's at the reward. Because let's face it, even a great trading plan out there can take you anywhere between 50 to 60% winning ratio. My numbers, and I share them publicly, are anywhere between 50 to 53, which means around every 100 trades, 50 of them are losses, are losing trades, are done, regardless how perfect the setup is. Regardless if I trade aggressive, if I trade on the 1 minute chart or on the 5 minute chart, doesn't matter. I'm going to lose 50 trades. But the other 50, they're going to go on 2-to-1 reward to risk. If there is a room for trading, for the price to move even further, I do a different management strategies that it's not part of this webinar how to manage the trades, okay, but we can do another webinar and explain you some important stuff about trading management. But for now, let's go to the methodology I invented, and it's what I call the 3AS with one S at the front, okay? So the 3 account simultaneously. Pay attention to this one. I'm a very into, I think with numbers, okay? I don't think anymore based on how I feel or what this. Even if there is an opportunity and I stare in front of the chart and the price, let's say, was going down and I spot a great reversal, like I spotted 2 days ago, and I was live, I think, with Jason that time. And we saw that, hey, the market is doing this, but overall is down, blah, blah. We don't have change of market structure and all this stuff that was on the 1 minute chart. And we didn't take the trade. And it ended up being a lucrative uptrend. We just got involved somewhere in the middle. We squeezed 2-to-1. And that's the end of the story. Now, personally, my numbers, what I trade, what I place on each trade, it's 1%. This is what I do, because it helps me with the 100K account to manage my risk perfectly. That's what works for me. Okay, I'm not saying you should do that. But I said earlier that the first 6 trades are the most crucial trades. What is this system about is I buy 3 accounts at the same time. I'm not saying you should buy 100K. You can buy 5K account, 3K account, whatever. Just make sure you buy the same account size. Why? It's important for your to have a clear understanding, okay, in the market. It's very important. For example, based on my situation, I use the 100K accounts. What do I do with this methodology? I place the first trade on the first account, the second trade on the second account, the third trade on the third account, and then I go from the beginning again and again and again. Why I do that? Let's take the first 6 trades as the example. From my experience, and I'm sure from your experience, you know that the first 6 trades, they bring the hype, enthusiasm, they makes you feel, you know, nice. I'm ready to trade. I press the reset button in my head, and I'm going now for the markets. The first trade is a winning trade. Okay. The reward to risk is 2-to-1 on every trade. If I lose, and I place $1,000 on every trade. If I lose 1,000. If I win, I make 2K on the account. If the first trade win or loss, doesn't matter, the second trade will be placed on the second account. I will explain you, I will walk you through why this is the best of the best ways to trade with prop firms. The second trade goes on the second account. The second trade was a losing trade. The third trade goes on the third account. It was also a losing trade. The losses marked with red boxes, winners highlight with green color boxes. The fourth trade was a losing trade, and it went on the first account. I repeat the same process. First trade on the first, second trade on the second, third trade on the third account, fourth trade on the first, and I just go from the beginning again. Now, this account, let's go until the 6th one. 5th trade placed on the second account, and it was a winner. And fourth trade on the third account, it was a losing trade. The distribution between winners and losses in trading is purely random. I know that every 100 trades, 50 are winners in my case, and 50 are losers, are losing trades. Maybe I'm going to get 4 winners in a row, maybe 7 winners in a row, maybe 8 losses in a row. It happens. I don't know the sequence between winning and losses. For this reason, your mindset becomes very sensitive trading under one account. Let's keep going. Up to the 6 trades, let's make the sum of the accounts. This account made plus 2K based on the reward to risk we explained and the percent on the risk. And this made minus 1K. So far the first account is in profit, is plus 1K. So 1% up. The second account, minus 1 plus 2K. So it's plus 1K, the second account. The third account is minus 2K. Are you with me? Are you still with me? Any questions so far? I think everybody's very, very concentrated to understand this concept here. Let's say that now we allocated 6 trades into 3 accounts. We allocate them randomly. So what makes us feel now? What's your psychology now? You are neutral. You don't have the sense of urgency. You are allocating trades. You are distributing trades randomly. The results are random through different accounts. And you are still feeling that, okay, I'm at the beginning. I see the first account is in profit, second account in profit. The third account is down 2%, but okay, I'm fine with that. You see, even now by just looking at these numbers, it doesn't create any distraction. If all these trades placed on only one account, let's break it down. The first trade was a winning trade and you made 2%, so you are plus 2% up. The second trade took 1% out of your account. It's okay. We are still okay. It can happen. The third trade breaks your account down to 0. You are at the beginning point where you started. The third trade here. The fourth trade takes you to minus 1%. You were up 2%. Now you are minus 1% and you are saying, oh my God, how can I do that? Maybe I'm doing something wrong. My strategy is wrong. Maybe I have to change I have to flip, let's say, from Bitcoin to gold, from German to Nasdaq. Maybe, I saw that Bollinger Band works so well in this one. I will change my strategy. Guys, this is the reality. This is the reality. I see it every day with different traders. The fifth trade was a winner. So you go plus 2%, minus 1%. You are plus 1%. And you are feeling, okay, we survive a little bit. The sixth trade was a losing, bam, minus 1%. The seventh trade was a losing trade, minus 2%. The eighth trade was a winner, back to 0. You start having that panic mode that traders, they feel, I have enough. You know what? I don't know. It's been so much. I'm trading. I'm still in the beginning. I place 8 trades and I'm back to where I started. I mean, I just need to go. I need to get it done. Then you start searching left. You start searching right. You are trying to find out what's wrong with the markets. You are trying to find out what's wrong with yourself. But it's nothing wrong with yourself if you follow a specific reward to risk ratio. It's just the distribution between win and losses is random and it affects your trading mentality. So if we go back to the 3 accounts, the 7th trade placed on the first account, it was a losing trade. So it's minus 1K here. The 8th trade placed on the second account and it happened to be another winner. Same with the 9th trade, another winner. Now, the 10th trade was a losing trade, minus 1K. And again, it happened to be on the first account. In this case now, up to the 10th trade, this account, the first account, is down 1K. Plus 2 minus 1 minus 1 minus 1, it's down 1K, minus 1K. Let's write it here, minus 1%, 1K. The second account, though, it's up. It was 2 plus 2 now. So it was 1 plus 2, it's plus 3%. It's plus 3%. The third account, it was minus 2. Now it's at break even. So now you placed the same amount of trades, but because you distribute them throughout different accounts randomly, you have these results. The one account at break even, another account at plus 3%, and another account at minus 1%. You see progress. Whereas if you trade everything under one account and you go through a 50-50 winning and losing ratio, you are back to zero up to this point, let's say. The 11th trade, it happened to be a losing trade and it placed on the second account, minus 1K. The 12th trade, it was a winning trade, plus 2K. This one minus 1K. This one plus 2K, minus 1K. We placed 15 trades. So we are plus 2, plus 4. We are plus 1% here. Regardless, we took one losing trade there and one winning trade there. The account now from break even, it went to plus 1%. This account, it went from 3% to 5 minus 1, 4%, plus 4%. This account here, it went to minus 1, 2, 3, 4, minus 2%. You have one account minus 2, another account plus 4, another account plus 1. You are doing progress. The third account, the other trade, 16th trade, minus 1K, 17th trade, plus 2K, minus 1K, plus 2, plus 2, plus 2. What's the overall? Let's do the maths. This account number 1, plus 2, plus 2, plus 4, 1, 2, 3, 4, 5, minus 1%. The first account, it's minus 1%, minus 1K. Okay, so I will put dollars here, minus $1,000. The second account, let's check this one here, minus 1, minus 2, 0, plus 2, plus 4, plus 6, plus 8%, yeah. Plus 8%, this one. Plus 8%, which means plus $8,000. And this account, minus 1, minus 2, 0, plus 2, 0, plus 2%. So plus 2K. Plus 2,000. You have three accounts. The one is down 1K, 1%. The other account, it's almost to pass the first phase. And the other account is plus 2%. Okay, on the way up. The way you can trade this, if you trade this way, it doesn't put you in any frustrated situation. Whereas if you're trying to put everything under one account, which it's okay, but I'm sure most of you already tried it, you will start messing with your account at the point of, let's say, 5 to 8,000. If your account goes from 5% up to 8%, you are worried what if I lose the account, or what if I don't hit the 10% target? So that will force you to close trades early from the next trade onwards. It will force you to move your stop loss at break even. It will force you to lower your risk size. It doesn't allow, it will force you to make all the trading errors on planet Earth. Why? Because this is how humans are wired. But with this way, this way takes away all the frustration. You see that? I present you with numbers, and it's a numbers game. You don't allow, this takes away the emotional side, this takes away the psychological side, it takes away everything. Now, how I trade the London Open. Long story short, bullish and bearish engulfings. Okay. What is a bullish engulfing? First, the price will make a lower low. It will falsely take traders believing the market will go down, but the price will go up, break the previous candle's high, and I enter here at the break. Usually, and I trade the DAX at the London Open. Usually, it's gonna move well for 20 pips before something else happens. Okay. And on the flip side, I like to trade bearish engulfing. Once the 10 a.m. candle takes the previous candle's high, I place a sell stop order below here. And it's, guys, it's something that I show it every day. By the way, I'm super duper excited because I'm happy that you are still here on the webinar. I will tell you what I created. I was working on a project the last 2 weeks, and I finalized it today. So I will present you something that I wouldn't expect that I'm going to do it. And it's something for traders. So let me show you the last, my September's trading log. On September 1st, 2nd, whenever you don't see a trade here, it means the setup wasn't there. So I didn't take the trade. I place trades on DAX 40, on the 5-minute chart or 1-minute chart at the London Open. I'm waiting for that. Either if I see something bullish or bearish engulfing at 9:55 at the London Open, 10 a.m. I place trades. If I don't see a bullish and bearish engulfing at that time, I wait for the London Open to make either a higher high or a lower low, and I place trades in the opposite direction to go for the false breakout. So September 3rd, it wasn't any trade here. The 10 a.m. candle is this one here. The price at 9:55 open and close there. At 10 a.m. the candle opened there. It didn't move up to create a higher high. It just went down and created a lower low and kept going lower. I didn't take any trades here. Yes, Mogil, remember, I used to present for a broker back then. Yeah, I used to take similar trades like this one. Yeah, you see consistency. What I used to do 4 years ago, I still do it today. This is how you become a professional trader. You can create income you can rely on. Okay. September 4th, our setup was right here. This is the 10 a.m. candle. The price opened there. It created a low, created a lower low, and I place a buy stop order above here. The price took me in. It reversed back. I don't mark around with my stop losses. And especially all my students, they know that. I'm very firm with my stop loss, with my take profits. I either go to take profit or to take the stop loss. I manage the risk only at some point, but again, because we are exceeding the time of this webinar, I don't want to keep you for a long time here, although I believe you enjoy it, but I want to show you as well what I created for you. Okay, I still don't believe that I'm doing this, but I did it. Okay, I will show you now. And then the price went to 221. So here I risked 1K on this one, stop loss below there, 221 was up there, and it got filled there. Was I worried when I saw the price going down there? Yes, I was. Was I feeling unsure? Of course. But I always remind myself, hey, 50 trades, they're going to go wasted. You will win only 50 trades. So it's okay. It's a part of one of these 50 and it's okay. So it just keeps me on the flow. I'm not a robot. I am human. I have feelings. I have emotions, but I don't let them to mark around with my mindset in trading. I know how to control them. This one here, September 1st, it was a nice bearish engulfing form before the London Open. I always keep a little bit wide stop loss to allow the market for any weird situation. I went in 2-1. The price kept melting. I remember this one. The price kept going, but I just took my take profit. I just I just get out of the trade and that was it. I mean, the market could make me 4-1, 3-1. Yes, it could, but it's okay. You need to let it go. It's okay. At the end of the day, we are profitable. The September 8th trade, it was this bullish engulfing here, and I remember this was on the 1 minute chart, not on the 5 minute chart. All these are on the 5 minute chart. I placed after the bullish engulfing form, I think that was 10.01. This one here was the 10.02. I bought there with a stop loss below this low here, and I went in, and right here the market gave me the profit. You see how the price went from here and it came all the way down to the entry and then it went back. Normal retracements, it's the soft trends, as I teach to my students. There are soft trends. Then September 9, that was a losing trade. By the way, I don't only show my winners. Okay, that was a losing trade here. I enter at the bearish engulfing, this one here, that one, and my stop loss was there, take profit was down. Yep, I got the losing trade. It's okay. Another one here, September 12th, I bought the one, I think that was another 1 minute chart. I bought it there, stop loss below there. It took the take profit. This one here, September 15th, it was a bullish engulfing. 5 minute chart. The price made a lower low first. I bought after the price broke this high here, and I got a losing trade. The market took my stop loss, and then it went up again. Did I re-enter again? Of course not. I mean, it's okay. It's just a losing trade. And September 17th, it was another bullish engulfing here. Yesterday, actually. Yeah, today is the 18th. Yeah, yesterday. We enter at the lower low, at the false breakout. We bought at the break of this candle, and the price, yeah, it retraced, and then it took us to the take profit area. So total 7 trades, it happened, and 5 was winner trade, 2 was losing trade. Reward to risk 2-1. So do the maths. Simple. Minus 2K plus 10K. Net profit 8K. It comes effortlessly once you let things distract you, let them on the side, let them to go away, and you just keep focusing on how the market will operate. You execute trades perfectly, and you let your orders to show the result. Okay, so guys, are you ready? I decided that I'm gonna officially, by the way, that's all for this webinar now. Okay, trading, it's a skill. You need to learn it, but it's going to take time. However, I want to let you know right now that you are not alone. Why? Because after a lot of thoughts, I came to the conclusion that enough is enough. And I've created one of the most amazing community, I believe, on planet Earth when it comes to trading. It's the lowest cost with the highest value. And I'm showing you the calendar that it's already started, let's say from last week. And it's a full calendar. Every single day, full calendar. Mondays, organized. Tuesdays, major events. We're going to do live trading. We're going to have chart school days. I'm going to teach you everything. Gradually, I'm going to allow you to take your time to learn. Okay. On Wednesdays, for 1.5 hours, I'm going to go again live. It's been about 4 years to go live, to trade live again. And Mogil is here. He used to see me live day trading for about 6-7 months, and he knows how well it goes, right? So I'm going to do it for 1.5 hours, only for the members of the community. Okay. On Wednesdays, we're going to have like workshops. Guys, actual workshops. You want to share your screens if you want. You're going to have your cameras open. You're going to have your microphones open. We are the same. We win the same. We lose the same. Okay, we're going to do everything as a community here. On Fridays, we're going to have the Friday flow. We're going to analyze the week. We're going to do a little bit of chit chat, everything through nice discussion. Everyone has voice in my community. Everyone will be allowed to speak, to say whatever they want nicely. Okay, you're going to support each other. We're going to help each other. I'm going to be involved and I'm going to be active in the community. Okay, and that will be the only place you will see my presence. Okay, not in any other channels. All right. Plus that, soon traders, they're going to have access to the full complete course that I created, and I put here every single thing in chapters, in categories, why I do this. You're going to have everything, okay? But this comes at a later stage. So what's the what's the trick to that? Okay. Now, how to join my community, guys? Usually it costs a lot, but for the first 100 people, I'm going to do something crazy. We're going to, are you ready to hear that? Guys, 39 US dollars only per month. Okay. Maybe you think that I'm nuts, but I'm going to do this only for the first 100 people, and that's all. Whoever is going to join with this price, it's going to be locked forever. And when I increase the price after the 100 people, the price will double, okay? Because my standard was the 99 US dollar per month, but I want to, the people that they're going to trust me at the beginning, also the people, they know me that I'm serious and I'm a real trader. I'm not just posting left and right. If you see my YouTube channel, it's not that, that YouTuber stuff. It's purely authentic things. So if you want to join, I will share right now the link. Again, this is going to be only for the first 100 members and not one single member after that. Then the price is going to go double or $99. I haven't decided yet. Okay, so the community is ready. You just need to take your seat, and your trading learning journey, excitement starts from there. We're going to put a lot of competitions, a lot of raffles. You know me that I give a lot of free coaching to competitions when we win and all this stuff. So totally fine. I'm going to be there for you. I'm going to be there with you. And finally, you're going to have a trading house, a trading home. Okay. The way I structured the community and the days and the lessons, and I will add more, it's perfectly designed that from what I experience with traders going through different stages. So if you are a beginner, if you are intermediate, if you are advanced, everything will be covered. Plus, once per month, we're going to have the welcoming for all the members. Okay. And I'm very excited. I'm happy for that. And you are all welcome to join. So what's the surprise from the PropXP now? Whoever participate in this webinar, first we would like to thank you. And also, only for the next 24 hours, you guys have the opportunity to purchase any account you want with 50% discount. The code is webinar50. Webinar50. Up. Yep. So and that gives you 50% discount. This discount will be only valid for 24 hours. Okay, so if you want to purchase, just I think it's the best time to do it. Okay. I don't see any other questions. If you need anything on the Linktree, you're gonna find absolutely. You will find them on Linktree. I have the Trustpilot reviews. Here is how to join the community, guys. You click here on the Linktree I shared with you. Click Theo's Trading Community, and you're just going in. All right. I'm also a verified member on Fiverr, on other platform. But yeah, so you are very welcome, Eduardo, for the first 3 account sample. I hope that makes sense. Guys, I hope this webinar added value to you. I hope from now on you're going to see trading in a different perspective. You understand the game of how to trade with prop firms. Myself, my academy, Theo's Trading Academy, it's here to hug and serve all traders in the world. I will be happy to see you inside the community, and from tomorrow to start working together. I'm excited about that. And the Prop XP, in my experience, is one of the best prop firms out there because of not only because of their condition, but also because of the people they are behind. They are on the live chart, on the support, the team behind. It's amazing. I really love these guys. They are great. So I will leave you with that. Take care. Thanks for joining us. And I look forward to see you inside the community. And happy trading. Take care, everyone. Bye-bye.